Welcome back to Iraqi Dinar Alert. Today, we're tackling a massive topic, the IMF, the World Bank, and the Iraqi Dinar. What is really going on behind the scenes? For years, the Iraqi Dinar has been a hotbed of speculation and rumors, especially online. Many investors hang on every word from international institutions like the International Monetary Fund and the World Bank, believing they hold the secret key to Iraq's currency. But how much influence do they truly have? Let's cut through the hype and get to the facts. First, let's understand the dinar's current position. The Iraqi dinar, or IQD, is a managed currency. This means the Central Bank of Iraq, the CBI, is in the driver's seat, not the free-for-all global forex markets. For a long time, the dinar has stayed pretty stable at a low exchange rate against the US dollar. Why? Well, Iraq's economy heavily relies on oil, and it's faced significant political instability and security challenges for decades. Now, you might be thinking, but Iraq has vast oil reserves and is rebuilding. Why hasn't the dinar's value shot up? That's the million-dollar question, and it's where the IMF and the World Bank enter the conversation. Let's talk about the IMF. The International Monetary Fund isn't some shadowy organization manipulating currencies. Its main job is to promote global financial stability. It does this by giving loans, technical help, and economic advice to countries facing financial trouble. In Iraq, the IMF has been involved by monitoring finances, recommending economic reforms, and offering support when oil prices crash. They also provide advice on how to manage money and budgets responsibly. But here's the crucial point. The IMF does not set the Iraqi dinar's exchange rate. That power belongs solely to the Central Bank of Iraq. What the IMF does is strongly encourage Iraq to keep its currency stable, control inflation, and avoid any sudden, artificial changes that could damage the economy. In short, the IMF is all about stability, not a sudden, massive revaluation. Why does the IMF care so much about stability? Think about it. From their perspective, a sudden, huge jump in the dinar's value could be disastrous if Iraq's economy isn't ready. A much stronger currency would make Iraqi exports more expensive, which hurts business. It would also reduce the government's revenue from oil, since oil is sold in US dollars. This could lead to job losses and a spike in inflation. Because Iraq's economy is still so dependent on oil and importing goods, the IMF advocates for gradual, steady reforms, not shocking the system with a dramatic currency move. So what about the World Bank? They play a different, but equally vital role. While the IMF focuses on the big picture of economic stability, the World Bank zeroes in on long-term development. In Iraq, this means they support projects like rebuilding roads, power grids, and water systems. They also help with reforming the public sector, fighting corruption, boosting private businesses, and reducing poverty. Just like the IMF, the World Bank does not directly control or influence the dinar's exchange rate. However, the projects they fund help create a healthier, more robust economic environment. A stronger economy is the foundation for a stronger currency, but it doesn't automatically cause it to happen. It builds the stage, but it doesn't write the script for a revaluation. This brings us to some common myths that circulate online. Let's bust a few of them. Myth number 1. The IMF is delaying the Iraqi dinar revaluation. There is absolutely no evidence for this claim. The IMF advises Iraq on economic policy, but Iraq makes its own decisions about its currency. The CBI is in charge. Myth number 2. Once Iraq follows all the IMF's rules, the dinar will skyrocket. This is a big one. IMF programs are about creating financial discipline and long-term reform, not instant wealth. Even countries that perfectly follow every IMF recommendation rarely see their currencies explode in value overnight. It's a marathon, not a sprint. Myth number 3. The World Bank is secretly preparing Iraq for a global currency reset. This is pure speculation. The World Bank operates transparently. Their reports are published. Their projects are public. There is no hidden agenda tied to a sudden change in the dinar's value. So if it's not the IMF or the World Bank pulling strings, what actually determines the Iraqi dinar's value? The real answers are far more practical. First, oil revenues and economic diversification. Iraq is still overwhelmingly dependent on oil. To support a stronger dinar, the country needs to build up other industries, from agriculture to technology. Second, political stability. This is huge. Investors and global institutions need predictability. Constant political turmoil weakens confidence in a country's currency. A stable, functioning government is essential. Third, foreign reserves. The Central Bank of Iraq needs a strong stash of US dollars and other foreign currencies. These reserves allow it to manage and defend the dinar's value on the market. Fourth, inflation control. Nobody wants a currency that loses its purchasing power. Keeping prices stable is a prerequisite for any currency to gain value. And finally, banking and financial reform. Iraq needs modern, transparent, and trustworthy banking systems to attract international investment and build confidence. The IMF and the World Bank support all of these goals. They provide the roadmap and the tools, but they don't magically flip a switch that revalues the currency. That power and that responsibility lie with Iraq itself. So, is a revaluation possible in the future? The answer is yes, but probably not in the way many hope. A gradual, steady appreciation of the Iraqi dinar over time is a much more realistic scenario than a sudden, overnight lottery win. As Iraq continues to strengthen its economy, improve its governance, and reduce its dependence on oil, the dinar could slowly and surely gain value. However, this process will likely take years, not days or weeks. Anyone investing should be extremely cautious of sensational claims and focus on the real economic fundamentals, not the online hype. So let's wrap this up. The bottom line is this: the IMF is focused on stability, not engineering a massive revaluation. The World Bank supports long-term development, not manipulating exchange rates. The Central Bank of Iraq is the one in control of the dinar, and its decisions are based on the country's economic realities. The future of the Iraqi dinar depends on real, on-the-ground progress, solid reforms, lasting stability, and sustainable economic growth. It does not depend on secret deals or hidden plans. Understanding these facts is the key to separating reality from speculation. It allows you to make informed, rational decisions based on what's really happening. Thanks for tuning in to Iraqi Dinar Alert. If you found this breakdown helpful, be sure to like, subscribe, and hit that notification bell so you don't miss our next update. We'll see you in the next video.